Hi everyone, my name is Ben. Welcome to the channel where I try to find you investment ideas that could potentially multiply your wealth. In this video, I will discuss why I think Osisko Gold Royalties is an excellent investment opportunity to add to your watch list. Osisko is in the royalty and streaming business. That means Osisko lends money to mining companies in exchange for a royalty that pays a small gross percentage of the value of the metal being mined, or the loan is exchanged for a stream that gives Osisko the right to buy a percentage of the metal mined at a discount to the spot price. Royalties and streams give leverage to metal prices, but insulate against inflationary cost pressures. Osisko currently has 21 production assets, with 96% of their gold equivalent ounces, or GEOs, coming from precious metals. Of the 21 producing assets, 86% of them are in the lower half of the production cost curve. Osisko's assets are mostly located in safer Tier 1 mining jurisdictions, with around 86% located in either Canada, the US, or Australia, making them a standout from peers on jurisdictional risk. Here's a chart of Osisko and their peers' margins. Osisko is leading its peer group with margins of 96.5%, which is 12.9% higher than the average of their competition group. We will now take a look at two different valuation metrics. On the left is enterprise value to EBITDA. Osisko is trading at 17.6, more or less in line with other relative companies. On the right is price to net asset value. Osisko trades at about a multiple of 1.25 using this metric, which is at the lower end compared to their peer group. Osisko's balance sheet looks strong. They have 85 million in cash. They also have 157 million in investments. The current debt is 135 million. They also have 615 million in available credit. This credit could be used along with their cash to potentially add non-dilutive royalties and streams to the future of the company. Here is a look at the price performance of Osisko since inception. It has a decent history of performance and has done especially well after 2020. Here is a chart that highlights the advantages of a royalty and streaming business model. Osisko has benefited from 1.19 million meters drilled since 2019 at no additional cost to shareholders. This drilling could potentially increase the company's future net asset value and cash flow. The company is very shareholder friendly. Osisko has returned over 300 million to shareholders in the form of dividends, which it currently yields 0.96%. Next, we will discuss some charts of historical performance. The first chart is production of gold equivalent ounces from 2015 to 2023. Osisko has increased production from 30,600 GEOs to 94,300 in 2023. The second chart is operating cash flow per share. This metric has increased from 33 cents a share to $1.01 in 2023. On the right is net asset value per share, which has gone up from $10.99 in 2015 to $16.88 in 2023. So overall, great historical performance by the company. On this slide, we see the company's gold equivalent ounces produced for the last few years, along with the company's outlook for future production growth. You can see in 2024 that the company had some issues with the Renard shutdown and the Eagle mine suspension. Their outlook looks a little rosier though, with projections of 120 to 135,000 GEOs in 2028, over a 40% upside from 2024. This is very impressive growth. The analysts have an average 12-month price target for the stock of $32.94, giving about a 17% upside from here. I think the key takeaways for Osisko are most of their assets are located in Tier 1 mining jurisdictions, impressive triple in operating cash flows from 2015 to 2023, and potential of over 40% growth in GEOs in 2028 from 2024. That's it for now. Remember, this is not financial advice. Please do your own due diligence. Thanks for watching, and I'll see you in the next one.